Looking at the Coronation Balanced Defensive, perhaps we can just start with the philosophy that underpins this fund.
Okay, Bronwyn, yeah, thanks for the opportunity. The Balanced Defensive Fund plays in that space where investors need to protect their capital but still show some growth. So our aim there is to do cash plus 3% that is, and we've been pretty successful in doing that over the last 3 years. We also try our very best not to ever go negative, so the fund has a sub-aim other than just the cash plus 3 to also not ever go negative over any rolling 12-month period. And even in 2008, when the world had that remarkable meltdown with the Lehman Brothers crash, we still managed to do just about 4% in that year. So we're quite pleased that we've been able to confirm to our mandate.
Charles, just looking at your top 10 holdings, your top holding is Coronation Global Opportunity Equity Fund. Reading from this, the first question is, are you fully 25% offshore? And secondly, just if you can give us an idea what's in the Opportunity Fund, you know, what attracts you to this, or what is the attraction in this fund?
Okay, well, the first answer is easy. We were, at the end of June, we were 24% offshore, so as close to 25 as we can. We've been receiving fantastic cash flows, so we've been growing at about 350 million rand a month. So to keep the 25% limit, you have to reinvest all the time. But we do believe global equities offer better value than domestic. So at the moment in the portfolio, we have a higher percentage in global equities than in domestic equities. And in that Global Opportunities Fund, that's our fund of fund offering, where we have global fund managers who do the investments on the Coronation's behalf. You know, we don't have a office in London that does the research ourselves. We just use other fund managers that we like, ones who remind us of ourselves.
So if you were given the opportunity and you were allowed to do it, would you be 100% offshore?
Not in a fund of this mandate, no, I wouldn't. We have to take into consideration the volatility of the currency, and I think investors in this fund are nervous about volatility, and to predict the currency is so difficult that no, I wouldn't go 100% offshore. But also this fund has we try to generate some income, and we need to have 60%, our own mandate is 60% in income generating assets at all times as a minimum, so only 40% in the growth assets. And interest yields are so low in the rest of the world that no, you can't go flat out overseas.
On the local front, Charles, is looking at your equity exposure, your biggest exposures to MTN, some 1.3%. And a moment ago, we were chatting to Ernest Kaplan, the MD of Kaplan Equity Analyst, saying that absolutely MTN holds a big growth opportunity going forward, given its exposure on the African continent. Are you positive on MTN going forward? Is this a stock that you are going to hold for some time to come?
Yes, absolutely. In the equity selection that I do for this portfolio, I do give preference for companies that have a defensive sort of business model, and the cell phone companies like MTN is a perfect example of that. And what we mean by a defensive business model is the turnover of the company and the profits is not that aligned to the economy. You know, if you take car sales, for example, if the economy goes into a weak spot, boy, car sales collapse. But where the economy is cooking or very slack, people speak on their cell phones about the same. So it has a defensive business model, it generates fantastic cash, and we think they will be able to pay out handsome dividends over time. And that's the sort of business we like in a portfolio like Balanced Defensive. You want conservative companies with good cash flow, and that's where the returns will come over time. So MTN, with the growth opportunities in Africa, is a unique company, and I think merits a high weighting in any portfolio.
Charles, I see you have Fountainhead and AccuCap as some of your big holdings as well. Do you prefer those from a yield point of view to anything on the fixed interest side? Because I
Absolutely.
Okay.
Yes. Now that's absolutely the fact. The properties we hold is for yield. If you see what we hold in bonds, you'll see we own 40% in bonds. But don't get sort of confused that that's the traditional government bond. It really isn't. We own a lot of inflation-linked bonds, and we own corporate bonds, but we own nothing, zero in ordinary government bonds. We think they offer particularly poor value. And for additional income yield, we find the property trusts at least offer better value than domestic bonds.
In terms of Standard Bank being your play on the financial front and certainly in your top South African equity holdings, is this again one of the defensive properties that you see going forward? Do you not think that this is a stock that suffers when the consumer suffers?
Yeah, the bank shares are a bit more cyclical than would be a company like MTN, for example. But you know, there's a place in the portfolio for bank shares as well, and Standard is our preferred one. We think it's got the best business model, best management overall, and currently it is just very attractively priced. They've had a problem in their global business and they're scaling that back down, so the market has given them a bit of a hiding of late, but I think that currently at about 100 Rand a share, we think it's particularly attractive.
Charles, I'm a wild commodity bull, and I know this is a defensive
a wild commodity bull. I echo that. I speak to him regularly on this news desk.
And I still think there's a lot more growth there. I know this is a balanced defensive fund, but going away from your balanced defensive cap, because I think you run other funds as well, what's your outlook on shares like Kumba, Exxaro, Billiton within the South African, within your South African choices?
And then just to clarify, David's got a target price on Kumba of 550 Rand. He loves the 8% dividend yield. So he's looking for a very bullish answer here, Charles.
Okay, well, I'm not going to give the answer that David wants. I'm going to give the answer that I think is the correct one. And we in a balanced defensive product, in a conservative fund like this one, we will almost always, unless the valuation is absolutely compelling, we will almost always have fewer commodity type shares. Those are the more volatile shares in the portfolio than we would in an ordinary general fund. So that as a basic starting point, I think we'll have fewer really volatile type shares. That means I don't own any direct gold shares. I have recently bought some Impala, so that's the only platinum share I own in this portfolio. But I do own Anglos and Billiton. I think they offer reasonable value at current prices, but I don't go too big in those commodity type shares just because they are so volatile that, again, in a fund like this, I think it's inappropriate to have your clients go through that sort of a roller coaster ride that the commodities give you. For a wild bull like David, it's okay, but for the clients in this fund, it's not.